and thank you all for joining me this morning for our webinar on the government supports around the COVID-19 pandemic. For any of you who don't know me, my name is Emer Joyce. I am the Head of Tax with Grant Thornton for the BMW region, and I have been working quite closely internally with our team on the COVID-19 pandemic, and again, indeed, in liaising with revenue on this. So what I'm going to just take you through this morning is there are a number of supports, as you're probably well aware. Sorry, just a bit of a technology issue. Yeah, there we go. A summary of supports here that the government have introduced to assist individuals and businesses through the COVID-19 pandemic. So the first one that we look at in a little bit of detail will be the Wage Subsidy Scheme, which reimburses employers where their employees are retained during the pandemic period. The second one that we'll look at is the unemployment payment, which is an enhanced unemployment payment to individuals who have lost their employment either temporarily or permanently due to the COVID-19 pandemic, and also for self-employed individuals who have ceased trading due to the pandemic. We'll also briefly look at the short-term working support, and we will also look at the COVID illness benefit. For those of you who are familiar with Zoom, you'll know that there's a Q&A box at the top of your screen. If you just hover there, it might be the top or bottom of your screen. So if you wish to type in questions as we go along, please feel free to do so. And I will try and deal with all the questions at the end if that is okay. So just to move on. Sorry, the slides are just a little bit slow moving, but bear with me. Okay, so the wage subsidy, what is it in a nutshell? So in its simplest form, it's a subsidy provided to the employer, and it provides up to 70% of the employee's average weekly net pay, where their average weekly net pay is below €786 per week. And that average weekly net pay is calculated looking at the January and February 2020 pay period, which was a 9-week period. So effectively, you're looking at the average of that 9-week period. The maximum available is €410, which is effectively 70% of the 586. So if you have an employer who normally earns €500 a week net, it's 70% is the subsidy that that individual is entitled to under the scheme. Where your employee's average weekly net pay is between €586 and €960 per week, the subsidy available is €350. There's no subsidy applying where the average weekly net pay is greater than €960. Subsidy is expected to be topped up by the employer unless they're not in a position to do so. So I suppose the government and revenue are particularly encouraging employers where they can do so that they should top up their employees to leave them as close to their normal weekly take-home pay as possible. The initial duration of the scheme is for a 12-week period. So on the next slide here, we have outlined a useful decision tree. On the left-hand side, it has outlined the qualification employers must satisfy in order to be within the scheme, the qualification criteria. So firstly, they must be experiencing significant negative economic disruption due to COVID-19. And as a result of that, be expecting a minimum decline in business, which is either in sales, i.e. turnover, or orders. And we'll come on to that in a little bit more detail in a few minutes. They must be unable to pay normal wages and outgoings fully as they're falling due. And again, we'll come have a little bit more discussion on that in a moment. And lastly, that they want to retain their employees. And that's the key point, is for employers who are retaining their employees on payroll. So on the right-hand side of the decision tree, what we have here is an outline where you've decided that your turnover will not fall below the 25%, no subsidy is available. If you're saying that your turnover will fall below it, then we're looking at the level of pay your employees are getting. So again, if you just follow it through, you'll see where there's no subsidy available where someone earns more than 960, the subsidy being capped at 350 for people in the bracket 586 to 960, and the subsidy, as I mentioned, of 410 maximum where you're below 586 a week. As I've mentioned, the top-up payments can be made, and this is all processed through normal payroll. I suppose one thing to mention is that the employer's PRSI rate applying is a reduced rate of 0.5%. So if we look at what is an eligible employer, as I've already mentioned, the employers need to satisfy the criteria on the decision tree on the previous slide. Important to note that the scheme is open to all sectors across the Irish employer market. So again, it doesn't matter if you're a small business, if you're a larger business, across all sectors, if you meet the criteria, you can qualify for the scheme. In qualifying, you're making a declaration to revenue that you do meet all of the conditions we've already mentioned. And the scheme is available for employees who were employees at the 29th of February 2020 and for whom a payroll submission has been made to revenue on time. And I think that's a very key point here, because we've had some scenarios where payrolls weren't submitted on time, not the payment of the tax, but actually the submission of the payroll itself. And those employees are technically not eligible to be included in the scheme. The revenue will be publishing a list of all employers who've used the scheme at the end once it closes. I suppose just to put a bit of context around that, that was causing a little bit of concern and confusion when it was first announced, but as of last Monday, there was 40,000 employers registered, and as I've mentioned, across a spectrum of sectors and sizes. So there will be, I think that number is only going to grow, because if you think about it, the payrolls that have been run so far would have been the weekly payrolls. Monthly payrolls have yet to come on stream, so I expect that that number will increase quite significantly above that. Revenue will be of the same view. So applying for the scheme is a very straightforward and simple process. It's done through ROS on your My Inquiries section. You literally select the category of COVID-19 Wage Subsidy, and there's a drop down there which is for the declaration, and you literally self-select the declaration and submit it, and that is the registration completed. In terms of the actual payments and the receipt of the payments from revenue, it will be processed into your nominated account on My Inquiries. So just to be mindful of the fact that normally for payroll taxes, the account will be a payment account rather than a refund account. So just to ensure that you have the correct EFT details of the correct bank account in that section. You may have already set it up for other taxes in the past, but just to ensure it's there for PAYE. So the system, as I've mentioned, will be operated through the normal payroll process, and revenue will be endeavouring to process all of the refunds within 2 days of the payroll being submitted. And I understand from clients I've been speaking with this week, they had received the money within approximately 2 working days of lodging their payroll. There is no income tax or USC applied on the subsidy, but income tax and USC will apply to any top-up payments made by the employer. And we'll have a look at that in a little bit more detail in a minute. In terms of employees' PRSI, there is no employees' PRSI on either the top-up or on the subsidy payment. An employer's PRSI will not apply on the subsidy, but will be on a reduced rate on the top-up. So as I've mentioned already, the reduced rate there is a rate of 0.5%. Important point to note is that an employer must not operate the scheme for any employee who's making a claim for the pandemic unemployment payment or other duplicate supports from the Department of Social Protection. The subsidy, as I've mentioned, is not liable to income tax at the moment or USC, but it will be liable to both income tax and USC on review at the year end. We're not yet clear on how revenue intend to operate that. Will it be directly engaging with the employee, or will it be through payroll directly by an adjustment to tax credits? Just an important thing as well to note is that at the moment, as the subsidy is working, people will in the first week or two get a refund of income tax, and I suppose it's not really a correct reflection of where they stand. The refund is effectively of income tax and USC from the first 9 weeks of the year. So as far as possible, employees should probably be encouraged to put that money aside, because it's not a real tax refund due to them. It's just the mechanics of how the scheme is working. Just very important, I suppose, to keep an eye on updates on the scheme, because it is still being fine-tuned, and we are expecting some further changes to it in the coming days. So in terms of revenue records, and what would the revenue expect businesses to have? So again, the revenue are going to be taking quite a pragmatic approach to this. You're going to be self-assessing yourself at the moment that you qualify for the scheme, and you're going to go into the scheme on that basis. However, revenue, as is the norm with revenue, reserve the right to review cases. Will it be every case that is submitted? I'm not sure at this stage. I expect that there will be an element of desk reviews being done. But in terms of documentation and proofs that revenue would expect, they have indicated to us that it would be the normal records that you would have or expect to see in the business, having regard to the type of business that you have, the manner in which it operates, and the type of client base that you have. So the first thing I think that's of key importance, and certainly where businesses aren't closed, this is the key piece of information that you should be retaining, is the rationale for the fall in turnover orders of at least 25%, and why, based on best estimates and best guesstimates today, you feel that you're qualifying under that. Obviously, in businesses that are closed, that's a clear cut, it's closed. And what period are we looking at here? We're looking at the period Q2 2020. So effectively April, May and June 2020 is the period where you need to be able to demonstrate the fall in turnover or orders. Again, referencing, I suppose, income and turnover projections for the quarter. In the absence of COVID-19, against where things end up will be important, again, to have those records quite clearly documented and available for revenue. Again, looking at comparative periods, so maybe Q2 2019, or indeed Q1 2020, or other month-on-month appropriate comparatives can be used. Again, looking at actual cash flows as against your projected cash flows. Again, I think this is an important piece of information for you as a business to have, irrespective of the subsidy scheme, but just in terms of if revenue do want to look at your records, it will be an important piece of information to have available. Again, if you're corresponding with revenue in terms of other forbearance measures, in terms of tax liabilities, all of that correspondence, I would keep it all together. Similarly, if you're negotiating with any other financial institutions or other creditors on some forbearance measures, keeping that documentation to hand also. And again, if you've notifications to employees or trade unions, all of that will be of relevance. And this is just an example of the type of documents that revenue would expect. In terms of cash reserves, and again, this has caused quite a bit of discussion. If a business is closed but has cash reserves, can they qualify for the scheme? And revenue have been clear that the existence of cash reserves it does not leave a business out of the scheme. But what we would, you should be able to demonstrate to the revenue, where the cash reserves, they're in the business, they're required to fund other business commitments or expansion plans. Again, it's what's relevant to your business. And I think certainly having that, a clear vision of where your business was going in the absence of COVID-19, and again for your clients, would be an important part of a discussion here with the revenue. I do think revenue are going to take a pragmatic view on all of this, having spoken with them. So we have outlined on our website, we have a very useful Q&A, which has been effectively put together based on questions we have received from clients at this point, and that we have clarified with revenue. I've just attached here a couple of questions that are, I suppose, the ones that keep coming up, and some of them we've already touched on already. So in terms of the eligibility for the scheme, as I've mentioned, the key indicators of the turnover, we're looking at Q2 2020. And it's just, as I mentioned already, to compare against the Q1 2020 or Q2 2019, whatever is relevant. The other thing then is, am I expected to proof of eligibility on application? No. And revenue will not give a confirmation either way whether or not you will qualify or your client's business will qualify. Effectively, you're working on a self-assessment basis here, and it's a declaration by the employer. So revenue will absolutely not look for proof of qualification at this stage. And as I understand it, due to capacity constraints in revenue, they're not in a position to deal with case-by-case applications on that either. It is purely self-assessment. Again, on the turnover having decreased by 25%, and I suppose in particular where businesses might have been effectively closed due to the social distancing requirements currently in place, but there are strong reserves, and as I've already mentioned, this is not a reason to not qualify for the subsidy. But again, having good records available as to the cash flow that you currently have and what the intention for that cash flow was would be of huge benefit in any discussions with revenue in the future. In some cases, businesses had already temporarily laid staff off, and the revenue have confirmed that even if these employees had been temporarily laid off and had claimed the unemployment benefit, they can still be included in the subsidy scheme. So they can be taken back on payroll as normal. Again, we had a couple of questions coming in from clients where they might have two trades operating, albeit in the one company, and that one trade may be severely impacted, the other trade may not fall by the 25%. So again, they're not sure if on a company-wide basis they're going to meet the 25%. And again, revenue have said a pragmatic approach to take here would be if the employer can demonstrate to the satisfaction of revenue that one trade has been impacted quite severely and can show documentation specific to that trade, and they give the example of management accounts, that the employer should be eligible to claim the subsidy for that trade and those employees only. Again, it's on a case-by-case basis, and I guess as advisors, we're best placed to discuss this with our clients and work through the rationale with them in terms of coming to a decision on this. Another question that has come up, and particularly I suppose in the case of essential businesses that are still operating and their turnover is unlikely to be hit by the 25% reduction, but they're maybe having cash flow difficulties or delays in receipts from debtors, and revenue have been clear that these people should not, or these employers will not be eligible for the scheme. So effectively, if it's a slowdown in debtor collection, if it's a slowdown in receiving payment from customers, that doesn't bring you within the wage subsidy scheme where your turnover has not been reduced by the 25%. So in those scenarios, obviously revenue have been quite clear with SMEs that there's a deferral available of payroll and VAT, payroll taxes and VAT, and similarly with businesses that don't fall into the SME space to engage directly with their own revenue districts, and obviously to engage with all creditors and all financial institutions would be an important exercise for clients and businesses to do. So in terms of the calculations, there's been a lot of discussion around the calculations, and I suppose the fundamental way that the scheme is operating is causing some of the confusion in that we're working off an average weekly net figure, where normally we're used to working from gross to net. So it's throwing up quite a number of anomalies. So I want to bring you through two simple examples here. So the first one, we're looking at somebody whose average weekly net pay is less than €586. So in this bracket, the subsidy available is the lesser of 70% of the average weekly net pay, or up to €410. So the maximum is €410, which effectively, as I've already mentioned, is 70% of €586. And then the top-up payment can do no more than bring the total pay to no more than the maximum of the average weekly net pay of the individual. And that top-up payment is now treated as a gross payment. So if we just look at the example below, we've somebody earning an average weekly net pay of €450. So the subsidy available here, being 70% of 450, is €315. So the maximum top up the employer can make here to be eligible to claim the full subsidy of €315 is €135. That €135 is taxable. So it's liability, income tax and USC. So effectively the net figure on that payslip will be lower than €450. So effectively it may bring the base average weekly net below the normal average weekly net. And unfortunately that is the way the figures are working. If the employer opts to top up by more than the €135 in an effort to ensure that their employees get their normal $450 per week, there will be a clawback of the excess. So I've just mentioned on the example here, if the gross top up applied was €200, the revenue will claw back from the employer's subsidy of €315, €65, being the difference between the 200 and the €135. So that is obviously causing a number of anomalies where employers want to leave employees, particularly in cases where businesses may still be operating and staff are still working. They want to leave them at their normal average weekly net pay. It's proving difficult here without foregoing some of the subsidy available. The other point, as I mentioned, is that you're going to have refunds of income tax and USC in the first week or two of the scheme, which should be paid across to the employees, and it's required that you would do so. And the issue here being then that the average weekly net on that first payslip will be higher. That is okay. So if the only thing that's higher than the average weekly net is the tax refund, there's no issue for the individual. We've had a number of questions coming in asking whether or not you could just operate on a week one basis for payroll so that you would avoid the refund of tax and revenue. I've been quite clear in saying no, you do not do it on that basis, operate on a cumulative basis for payroll taxes. So if we just look at the next example, is a scenario where someone earns greater than €586 per week but less than €960. So in this instance, the maximum top up available is €350. And again, you're processing the top up payment as a total pay. So again, looking at the example below, we've somebody with an average weekly net pay of €650. The subsidy here will be €350 and a top up being made by the employer of €300. And again, that top up will go in as a gross top up. So just a few things to note. Some of them we've already touched on. The revenue are obviously working quite closely with payroll software operators to update software to facilitate the scheme. And in terms of the actual processing of the payroll, the subsidy goes in as a non-taxable amount. It's not that it's not taxable at some point, but at the moment it's not a taxable emolument being paid. The top-up goes in as the normal gross pay. So just to keep in touch and encourage your clients to keep in touch with their software providers, that all updates are being provided to them. The next point is that the subsidy scheme has been introduced in 2 phases. So in phase 1 of the scheme, which runs from the 26th of March to the 20th of April 2020, the employer is going to receive €410 of the subsidy payable for the employee, irrespective of what the correct subsidy for the employee will be. And that overpayment will be due back to the revenue in the future. So my understanding from revenue is that it'll be done on a correction basis with subsequent payments in phase 2. Phase 2, it'll be based on the actual amount of the subsidy due. So it will be important, as each payroll run is done, that the employers keep a record of the correct subsidy due for each employee on their payroll in the phase 1 period, so they're happy that the refund that effectively is due back to the revenue is correct. In the phase 2 of the scheme, what we understand will happen is that the payroll software will update the RPNs for the individuals in question to have the correct subsidy actually calculated and brought into the pay slips as they're being populated. And that's what we understand is happening. But again, there no doubt there'll be further updates on that. I've already mentioned the importance of making sure that you have the correct bank account details on ROS for the refunds. And again, to make sure that you have a reconciliation there so that you're clear on the refund you're due each week from revenue. Because again, in terms of it will come into your employer's bank account as a single payment from revenue without a breakdown. So again, it would be advisable that your clients would keep that detail themselves. And also obviously that if there's any discrepancy that they can just discuss that directly with revenue. In terms of making top-up payments, whether partially or fully, as I've mentioned, they are liable to tax and USC. There is no employees PRSI, but there will be employers PRSI. And we've already mentioned there about the top-up being made where it's greater than the difference allowed. So on the following slide here, I've outlined a number of useful links. The first one is to Grant Thornton's own website. We've quite a number of articles, not all tax related, in terms of the COVID-19 pandemic. Some of it is around data security, remote working, so some interesting articles there, some may be of benefit and of interest to some of your clients. The other point to note is on the subsidy scheme, things like benefit in kind are not to be operated as part of the normal payroll. So again, we've a good article on that on our own website. The revenue website itself has again some good information there, so I have the link there and also the link to the Department of Social Protection. So I'll just move on now to look briefly at the pandemic unemployment payment. So this payment is an enhanced unemployment benefit of €350 per week, and it's available to employees who are temporarily laid off due to the pandemic or have for self-employed individuals who've ceased trading. It's a weekly payment for the duration of the pandemic, and all applications should be made online at mywelfare.ie. So again, it's not for the employer to do this, it's for the employee once they have been instructed to do so by their employer. In some instances, individuals may be better off to look at the normal job seekers payment, particularly where they have children, they might be entitled to a higher figure than $350 per week. The next one we'll look at briefly is the short time work support. So this is again another form of job seekers benefit available to employees who are put in a shorter working week. So in cases where maybe somebody has reduced down to a 3-day week. Again, the applications here are made to the Department of Social Protection and nothing to do with the employer. So again, just to watch that. And the last benefit that from a tax perspective that the government have brought in is this COVID-19 illness benefit. So this benefit is paid where a worker is told to self-isolate by a doctor or has been diagnosed with the virus by a medical professional. So they can apply for the enhanced illness benefit. Where you're in self-isolation, the benefit is available for a 2-week period, but it's available for the duration of your absence from work in cases where you have been diagnosed with the virus. The application for this is required to be supported by a completed medical certificate by your doctor. So again, the forms and all of that are on the mywelfare.ie website. But again, your doctor needs to sign off on that. It's not sufficient that the person is being instructed to stay at home by their employer. And again, you should not be in receipt of any payment from your employer in order to be eligible to claim this benefit. So there's a number of questions coming in here, which I'll deal with. Okay, so let's look at the first one or two here. And obviously, if there's other questions that I don't get to, I'm happy to take them offline. So the first question, per revenue guidance, employers with strong cash reserves will be expected to continue to pay a significant portion of employees' wages. If the employer doesn't want to pay a top-up, can they still avail of the scheme, or will revenue come back later to recoup the wage subsidy? So again, I suppose this is the million-dollar question that we've been asked on this. The expectation will be that the employer, I suppose, would effectively try and do their best by their staff and look after them, and that the subsidy is a means by which they keep their staff on their books. If it's a thing that the employer, has those cash reserves earmarked for other necessary expenditure once the business kicks off, that argument can be made to revenue at a subsequent date. But again, revenue haven't given any clear-cut guidance on that. So I suppose it's very much a case-by-case basis. Revenue, as I've said, will be taking a very pragmatic approach to all of this. The idea here, and certainly the encouragement coming from both the chairman of the Revenue Commissioners and the Minister for Finance, is they want employers to claim this. It's an alternative to employees being put on the live register. So I know that's not a comprehensive or complete answer, but that is the best that revenue are able to give us at this point. The next question is, when calculating the average weekly net pay when an employee had 7 weeks, not 9, can you divide by 9 or 7? My understanding is you can divide by 7 in that scenario. I suppose that also brings up another point as well, where we've had a number of inquiries where somebody was on the payroll, say for example somebody on their unpaid portion of a maternity leave happened to fall in January and February, and they're due back to work in March or April. Can they be included? Yes, they can be included, but the problem is the average weekly net for the period under review will most likely have been 0. So there won't be a subsidy available in that case. So that's a little bit of an anomaly. Whether or not that will be changed, I don't know. Can we get a copy of the slides? Yes, that's no problem at all. We'll circulate that through the Institute after the presentation. If you lay off employees, no. So if you lay off some employees, are you precluded from the scheme? No, you're not. Again, there's a myriad of different scenarios arising where you might have some staff earning greater than $960 a week. There's no subsidy available for those people. They may be taking a pay cut. You might have others on short-time working. So the subsidy is available whether your employees are working full-time or part-time or temporarily laid off. You as an employer can qualify. So in terms of public sector employees, again, it depends on the sector in question as to whether or not they're a qualifying sector. So effectively, you'd need to just double check the guidelines on that to see if the employer will fall within that. The taxable nature of the subsidy is going to cause, huge annoyance with individual employees, absolutely. So we're hoping that there will be some form of clarification and possibly tweaks over the next number of weeks, that when we get into phase 2 of the subsidy scheme, which is post the 20th of April, that some of that will be cleared up. So again, it's very much a case that it's a watch and wait. It is evolving by the day, and what we're doing is trying to keep everything updated on our own website. So certainly to keep checking the links on the Grant Thornton website there. What is the current guidelines if you're now on reduced pay but are still working 70% of your normal working hours to reflect the reduced pay? So it's not you applying for the scheme, it's the employer will apply for the scheme. So it's at the employer's discretion to apply for it, and if you're on reduced hours, the employer is still eligible to apply. So again, it will be the employer will make that decision. Yes, the subsidy is available where employees are on a reduced working week, but again, you need to be mindful of other subsidies that they may be looking to claim. Provision for the minimum wage, so this has caused a lot of controversy, I guess, in the media in terms of people on minimum wage and that they actually may be better off on the social welfare. So again, I expect that we're going to have some more clarity on that one in terms of minimum wage employees. So is the subsidy available for employees whose wages were reduced by 20? So again, if you're working part-time, if you're working full-time, if you've had a reduction in base pay, yes is the answer. You're looking at the 9 weeks average weekly net to see which bracket of subsidy you're in. Are you in the 410 or the 350 bracket? So it's very much a case of that's the base period you're looking at. What has happened since that base period does not affect the eligibility of the people that qualify based on that. So next question here is, we normally pay bonuses in the third month of the quarter, so paid bonuses in March this year, as the subsidy is based on the average of January and February. If we decide to pay bonuses in June, will there be a clawback of the subsidy? So your base period won't be affected here because obviously you're working off January, February, which is fine. If you pay bonuses in June, what's going to happen there is the bonus will effectively increase the top-up payment that is being made by the employer. So it will reduce the subsidy available to the employer for that period. So if there was an option there or a possibility of maybe looking to defer payment of bonuses, that might get you around that issue. Where you pay an employee their top-up payment to reflect the total gross, but there appears that the weekly employees, I'm not sure what I think that question may have been answered already. Weekly. Yeah, so can an employee be claiming the short-term working support if their employer is claiming the wage subsidy? We're waiting for clarification on that from Revenue. My understanding is that the employer claiming the subsidy takes precedence, and it'll be the Department of Social Protection will make the decision on what other supports are available. Yeah, I think the next question, again, as I said, there's a lot of uncertainty around how the tax will be sorted at the end of the year. We're expecting clarity on that. We're a seasonal business, and January, February are the quietest months. Sorry, that question's after disappearing there. Sorry, quietest months for the sales. I'm assuming there that you're just saying that in terms of a turnover. So the turnover period we're looking at is Q2 2020, so from April through June inclusive. So I'm just reading through questions. There's some duplication here, so if you just bear with me. So the next question is, if the employer pays the employee their usual salary, is any element of this considered top-up, or is the top-up the difference between their usual net salary and the 350 or 410? Yes, that's exactly the case. So you look at what the normal salary, average net salary would be for January, February, March, and the net top-up available that's treated as a gross payment now is net of the subsidy for the month. Where an employer pays an employee their top-up payment to reflect the hours worked and the total gross payment due, it appears that weekly employees get a significant increase in net pay because, 1, they do not pay tax and subsidy, and 2, they get a tax refund. Is this correct? Yes, it is correct, and yes, you're absolutely right. It could lead to a tax liability for the individual at the year end. Again, we're waiting for a little bit more clarity from Revenue on how they are intending to administer that. Question here in terms of cash reserves, are you taking the view that if the company is in a negative asset position as a result of intercompany debts, the company can qualify? Again, it comes down to what the reserves of the actual business are in making that decision. And as I said, it's very much a guideline rather than a definitive from Revenue as to what cash reserves a business would require. So we've let some employees go as a result of COVID-19, but they were on our payroll in March and April. Are they eligible for the wage subsidy scheme? Yes, they are. So calculating the average weekly net, you're looking at the normal average weekly net of the individual. And for the purposes of subsidy, things like pension and deductions and BIK can be ignored. Okay, so question here, and this has come up on a number of client calls we've had as well. What happens if you think your turnover will be down by 25%, but as you come to the end of Q2, you haven't dropped below 25% and you've already claimed the relief? So Revenue have been very clear with us here that they'll be taking a pragmatic view of this. So if based on best information available today, and if based on cash flows and on budgets that you have prepared for the business, it is reasonable to expect the turnover will have dropped. I don't see Revenue looking to heavily penalise a business like that. What they will look to do is they will look to review the information as to why and the reasoned logic as to why you went into the scheme. So I think, as I've mentioned earlier in the presentation, good records and good documented board minutes will be key at the moment. So there's quite a lot of questions here, so I'm going to try and hop through a few that are slightly different. A client company, most of whose business is done in Europe and the USA, but holds exclusion orders for its employees where payroll taxes do not have to be applied, and they do not have to obtain PRSI numbers for such employees. The company qualifies in all other respects. So effectively what is happening is the subsidy is available for businesses who have employees who are carrying out their duties in Ireland. So if you have an employee that doesn't fit that, they potentially are not going to be eligible for the subsidy scheme. But if we take the example of a business that maybe has a cross-border element to it, so for example, you might have a business operating in the south, you have employees who live in the north, they can be included in the subsidy. And similarly, if you have a business operating in the north of Ireland, but with employees and operates an Irish payroll, they can claim the subsidy for those employees. I've already mentioned that switching to a week one base to avoid a refund of tax revenue, said not to do that. I'm just going through the questions here. There's a question: if we did not refund the tax to the employees as we cap their net pay to their norms, is this okay? No, you're obliged to refund any tax refund that's generated to your employees. Why did Revenue not opt for a growth subsidy scheme? $1 million question. I wish I knew the answer to that. Can subsistence be paid? Yeah, we're waiting for a confirmation on the subsistence, but my understanding again is if it's part of the normal weekly net, it effectively what you're doing is you're starting at what the average weekly net for the 9-week period under review was, and then you're looking to see whether the subsidy applies. Payroll software calculates it before deduction of the pension results in high subsidy compared with the employee's normal take home. I'm not sure the question here in terms of the pension. So effectively what they've said is you should not be making any pension deductions out of the subsidy. Whether a pension deduction should be made out of the top up paid by employers, again, is something that they need to clarify for us. Whether or not employers should be continuing to make pension contributions on behalf of their employees, again, is something we're waiting for a little bit more clarity on. Is the top-up amount paid to the employees allowable as a tax deduction for corporate or income tax purposes? Yes, we understand it will be part of normal payroll costs. So looking at part-time staff, we're still operating with a significant decline in turnover. So again, you're going to have to work off the average weekly net for that period, and that's the base period you're working off in terms of the subsidy, but they can be included. So you can claim the subsidy for them, and if you want to top them up to bring them to their average weekly wage, that would be okay under the subsidy. In terms of calculating the average weekly net, things like overtime, anything that came in the first 9 weeks of the year should be included. We've had instances where bonuses may have been paid by employers in, say, February, and unfortunately that may have thrown some staff out of the scheme, and that is the case at the moment. Whether that will be changed, I don't know. At present, we are expecting, as I said, quite significant changes from Revenue. Question here: of a small accountancy practice, approximately 2 days are spent on bookkeeping contract for a business that has been required to close. The other 3 are spent on much diminished general practice firms and small companies. Can you apply? Again, if you feel the turnover of your business is going to be down by the 25%, there's no reason why professional services firms cannot apply for it. Question here in terms of the scheme starting on the 26th of March and that some payrolls may have been run. My understanding is that it's not possible to amend the payroll, that you have to start from your next payroll onwards. And an employer continues trading with significant reduction in turnover, lay off some employees and would claim the wage subsidy for others. Yes, you can. The pandemic unemployment benefit, or sorry, unemployment payment is €350 unemployment benefit that individuals are receiving where they've been let go. Company directors can also avail of the subsidy scheme. Yes, they can, provided their wages have been processed through the normal company payroll and they're below the income levels. Question here in terms of PRSI, where individuals are earning over €960 a week, so that there's no subsidy available for those. Is full employers PRSI applicable on these cases? Yes, it is. In terms of the age of employees, again, there's no upper end. If the employee is in receipt of a pension from some other source and is on your payroll at the 29th of February, they are eligible to be included in the scheme as well. Is the subsidy available for a company whose turnover and orders have ceased but they continue to manufacture? Again, the test that Revenue have outlined and that's been outlined in the legislation is it's a turnover or orders. So just a question here, I work in a pre-revenue startup, wondering what evidence the revenue will look for here. So in this instance, they're looking at a decline in investment. So again, similar to the fall in turnover or orders, you know, if you have good documentation and evidence of investment you were expecting to receive in the quarter that has now not materialized or will not materialize or is unlikely to do so, you should be fine. That's all the guidance we've got on startups at this stage. What happens in a situation where a company was due to lay off a large number of staff each May in any case? Can they stop using the wage subsidy scheme for a number of employees but keep the rest on it? Yes, you can. And again, I suppose that's another question that's come up with some of our clients, is that they, if they decide that they're claiming it and after a few weeks they decide that they're going to make some people unemployed, that is also fine. An employee currently receiving maternity benefit and the employer is topping up the so anyone on maternity benefit is dealt with separately, and people due to go maternity benefit, they're saying that you just start your maternity benefit rather than going into the scheme. Again, Revenue of that outlined in their guidance notes. The pension we put on hold for employees, I think yes is the message there, because you're not entitled to deduct it from the subsidy payment. So I'm just reading down through a few different ones. This is an interesting question. Does a sole trader have to cease trading with Revenue and re-register when all this is over? My understanding is that all you're doing is you're applying to the Department of Social Protection to say that your business has ceased trading. It's a temporary cessation of trade rather than a permanent one. So on that basis, you shouldn't need to be re-registering with Revenue. I'm just looking down to the other questions that maybe we haven't touched on. When will Revenue confirm how the subsidy will be taxed later? We're hoping to have some guidance on that in the next week or so. And I expect Revenue there. I mean, we've also been advised that there's likely to be other changes coming. I expect, you know, there's quite an amount of media coverage at the moment about the fact that some people are actually financially better off on the unemployment benefit of $350 a week, without, whereas they're getting less maybe in the subsidy scheme. If somebody had two jobs, they're laid off from one, if not the other, can they claim the $350 per week for the ones they're laid off from? It depends what's happening with the other employment. I mean, if you have two employments, technically both employers can apply for the subsidy scheme in respect of the income you receive from them. Question here on whether a company director has laid off staff, including their spouse, who's a director. Is the spouse entitled to the unemployment pandemic payment? Again, that's something you need to go to the Department of Social Protection on. They certainly, the S1 directors can be included in the subsidy scheme, but whether or not they're entitled to claim the pandemic unemployment benefit or not is a matter for the DESP, but I understand that they should be okay on the basis self-employed people qualify. Can you legally reduce an employee's pay without employee consent? That's more of an employment law matter, so I'll speak with HR on that one. Somebody said there appears to be anomalies. There's a huge number of anomalies. I'm just trying to go through them here. If there's other specific questions, feel free to reach out to the institution. We can deal with them later on. People are paying holiday pay as a top up, and that is being done. But again, I suppose I'm just conscious of leave periods. Other things that we've seen people and businesses do are requiring staff to take leave over the period where they're not busy, as a means to use up annual leave, that they're not left with huge holiday balances in the back part of the year. If the employee was on 80,000 per year, now working a 3-day week, and their salary being reduced, can they be included? Effectively, at the moment, no, they cannot. We may get some change to that. As it stands at the moment, that is not the case, that if you give somebody a pay cut, can they now qualify? It's again, you're looking at the first 9 weeks of the year. This one person has asked if I can explain the top-up calculation again. So what you're looking at is, and again, the slides will be available, hopefully it'll be a little bit clearer in that. What you're looking at is what the average net weekly pay is, the subsidy comes in as normal, and then the net difference between what subsidy you get and the normal average weekly net is now treated as a gross top-up payment. So again, if we look at the example I had in the slides, if you had somebody whose normal pay was say €650, you'll get €350 by way of a top up, and the difference of the net pay of 300 is now the taxable amount. Question in terms of monthly paid employees, again, it's the number of insurable weeks that were in the 2-month period. January, February is what you need to look at for calculating the average weekly net. Can employers pay the working from home expenses? Yes, I think Revenue came out and confirmed that I think it's approximately €3 a day. The other option is that the employees can claim it themselves at the end of the year from Revenue. Again, family companies, whether or not an entitlement there to unemployment benefit applies. Again, depending on the PRSI class they were on, they should be okay to claim the unemployment benefit. So I'm just going to see if there's any other questions that we haven't already touched on. Question here, manufacturing SME fully shut down, some admin staff working remotely. Can the subsidy apply to these employees, or is it only the manufacturing staff? No, it's your entire staff if your turnover on a complete company basis is down by 25%. There are a lot of anomalies with it. There's no question about it. In fairness to Revenue, they're working through it as quickly as they can with the time constraints. Their main objective was obviously to get weekly payrolls up and running for last week. I know now they're working on the April monthly payrolls, and obviously that's why I'm saying that we're expecting quite a number of changes. Client self-employed psychologist has had to stop face-to-face consultations due to social distancing, but has been doing phone call consultations. Income has dropped 65 to 70%. Can they claim the unemployment benefit? I think they need to discuss that directly with the Department of Social Protection. Again, if they're trading through a company, maybe they should look at the subsidy. Class J9 will also apply to a proprietary director. Yes, you changed the PRSI class. Does an employer have to inform employees prior to payslip issuance or putting them on the scheme? It'll be on the payslip, so I suppose, you know, from a relationship perspective with employees, it would make sense that you would inform your staff that you're claiming the subsidy. And you probably would be mindful as well of the fact that their net weekly pay is going to be a little bit down, given that the net top-up is effectively a gross top-up. So you're going to, they're going to be a little bit shy of their normal average take-home pay. It probably would be a good exercise to have had that conversation with your staff. Again, in terms of the messaging of that, I would speak to whoever you normally speak with on HR related issues and employment law issues. If somebody is claiming the unemployment benefit, even if it's temporarily, they need to be taken off your payroll. Absolutely. I think we've covered most of them. I'm just trying to flick through the last few questions here. You have to make the max top up. No, you don't. You can make whatever top up you can. You're not obliged to make a top up. It's only if it's possible for businesses to do so. We've had some instances where businesses who are fully closed and they're just saying that over the 12-week period, that if they were to start making significant top-ups, that they may not, that their cash reserves are fully gone. I suppose what is the objective here? The objective of the government is to retain the link with the employer and the employee through the 12-week period. And also they appreciate that businesses will need cash flow in order to be able to get up and running again once the pandemic passes. So it's not the exercise here is not about an employer using all of their resources or depleting all of their cash resources in paying staff currently. So I think it's very much, it's a case-by-case basis. There's no straight answer, no one size fits all on this. I think I've covered off most of the questions there. Like, as I said, there are still refinements being made to the scheme. I am expecting that there's going to be a lot of other changes, whether they're minor or major, remains to be seen. Had it come in as a gross subsidy, it obviously would have been an awful lot easier to administer. It would have avoided the issue of refunds coming through now, and it would have also avoided the issue of the subsidy not being taxable and being taxed later in the day. I'm going to draw it to a close. I hope that was of use to you. As I understand it, the Institute will share the slides later on, and I will also share with them, which they can attach to the slides, an interview that we had. It was a Q&A session that we had in Thornton last week with one of the principal officers in Revenue who is responsible for the scheme. And I suppose just, you know, to commend Revenue, there's a very small team in Revenue. I understand there's only about 3 people in Revenue working on this. As you can imagine, they're being inundated with queries throughout the day, every day. And at the same time, they're trying to work through the refinement of the scheme. Certainly our engagement with Revenue on this has been very positive and very practical. So again, I think we can expect that there will be more clarification forthcoming. They are listening to what practitioners are saying, and they are listening to the general public. Okay, so I'm going to finish there for this morning. I hope that was of help, and as I said, if there's other questions, my details are here below. Thank you very much.